know your limitations, right? At the beginning, we all think like we can do everything. As I've grown, I've realized that like I really should focus on the things that I'm good at because that's going to have the best ROI for me.
Welcome to Spur Equity's Spur Your Wealth podcast, your ultimate guide to passive income through real estate investing. Join us as we together discover the secrets of building wealth one passive investment at a time.
From expert insights to inspiring success stories, this podcast will inspire you and empower you to take control of your family's financial future so you can live life on your own terms.
All right, welcome everyone to another episode of Spur Equity's Spur Your Wealth podcast. We are your hosts today, Param Singh and Rav Singh from Spur Equity. So as you know, on the Spur Your Wealth podcast, what we aim to do is bring successful investors and experts and thought leaders on our podcast to share their story and their secrets in investing, and so we can all stand to benefit from their experience. And so on today's episode, we have Mark Updegraff with us. Mark has a very interesting background in photographic technology and imaging technology. He's collaborated on work with Kodak and with NASA, and later in his career has actually worked on imaging systems for high altitude aircraft. So really, really interesting background. And then in 2010, Mark moved to another passion of his and went full-time into real estate development and private equity. So today he manages his companies, which focus on residential, commercial, and mixed-use real estate properties towards his vision for Rochester and upstate New York. So really welcome, Mark. Really happy to have you on the Spur Your Wealth podcast. Really looking forward to today's conversation. I think, again, very, very interesting background. So I'd love to dive into a little bit of your background and then kind of what made you move into real estate. So again, welcome to today's episode.
Thanks, guys. I'm really honored to be here with you. So I came up to Rochester, New York, because I came to go to college, right? I was a younger man. I didn't really know what I wanted to do with my life when I grew up, and my mother had helped coach me into this program at RIT that she thought would benefit me because it was very technological. I always excelled in math and science, but I had this passion for the arts at the same time where I didn't want to just go into a science field and totally turn my back on my creative side. So it was a really good blend of the two. Not only was I getting physics and matrix algebra and optics, but I was also getting nature photography, studio photography, and then also things like high-speed photography. And it was the best of both worlds, and I loved it. I really did. But when I came out and I went into industry, I wasn't making the money that I hoped that I would make with a bachelor's of science degree, right? And so I worked in industry a couple years, and I kind of vetted my frustrations to my girlfriend, my wife now, and she said, "Well, just go back, get another degree," right? That's the answer to everybody's problems: get more degrees, make more money. So I went back, got another degree, came back out, went back into industry. I'm like, okay, I've definitely increased my salary. Not 100%, but maybe like 70% higher. And, we live in a pretty modest town, so like cost of living is low, and we're like, okay, we're still pretty young and we don't have any kids, so expenses can be kept down. But it really just wasn't the earning potential that I thought I would have, especially when I talked to some older scientists in the company that I worked for that had been there their entire careers. They said, hey, unless you're in management, you're not going to make very much money. Like, they made very little more than me comparatively for 20, 30 years in service. And that was very disheartening. And when I had been doing my master's, I read the Purple Bible, and I had done some stock trading, and I was just really focused on saving money because I wanted to put it into a passive investment. And real estate ended up being the vehicle of my choice. It was 2008 when everybody said, hey, don't buy real estate. My family, my friends, the news, everything was against it. And I said, you know what? I'm not going to listen. I'm going to go ahead and do it anyway. And if I make a mistake, I'll learn my lesson. I usually learn things the hard way. So I bought a property for $55,000. I used a Bank of America loan. It was very hard to get through the underwriting process at that time, as you can imagine. Banks are a little bit scared to lend. But honestly, the terms weren't terrible. It was a 90% loan to value. I was able to do seller's concessions even as an investor somehow. I don't know if like I didn't know better, my agent didn't know better, or what happened, but we made that work. And I got into the property for about $5,000 out of pocket, which was not very much money, in my opinion. Yeah, to get into an investment. And so as soon as I did that, it was a little bit of a value add. And so I was the one adding the value. And, I'd have a couple friends help me. If I look at photos, I'm like, man, I had no idea what I was doing. There was like painter's tape all over the place. And it was just a fun time to get that thing into service, start collecting the rent, and then realize that I'm kind of bored, right? Because that was some work. I had to source the deal, close it, get it ready, lease it. Now I'm managing it, but now that I'm managing it, everything's going well. I want to rinse and repeat. So while I was in school, I did that maybe a half dozen times. Went into industry with my rentals. Ended up getting laid off when they lost a legacy contract, and then I was forced to make a tough decision because there was 2,000 people in Rochester at my company that got laid off with imaging science backgrounds, all at the same time. And not only was my company laying off, but also Kodak was laying off and Xerox was laying off. So there was even more imaging people. The market was totally saturated. And I told my wife, like, got to move if you want me to stay in imaging. And she's like, well, I really don't want to move. And plus, you bought these rentals. So now what? You're going to have to sell these rentals that you just, spent the last couple of years working on? It's like, well, I don't really want to do that either. So how about I go out and get my real estate license? She's like, you're absolutely nuts because you hate salespeople. You think they're like the worst people ever. I'm like, yeah, I know. It's kind of a selfish motivation to get the license because I want to open the door for myself and not rely on my agent who is dropping the ball left and right. But she reminded me, that, hey, you still got to put food on the table. So you're not going to be able to run around and just buy investment properties if you don't have any money coming in the door. And so I was like, okay, I get it. So I'll go out, try to do some sales. Right. And so I go in and I meet my, my broker who was my landlord when I was in college. And I say, hey, I got my license. I want to hang it here. He's like, that's fine. Why don't you come on our team where we're going to take 50% of your commission so we can teach you the ropes. I was like, dude, I can do math. I'm really good at math. And if you take 50% of my commission, I'm going to starve to death. So I politely said no. And when I walked out the door, I just remember thinking like, how am I going to find people to buy and sell real estate? I'm not from Rochester. I'm pretty young. I've got no experience doing this. But I didn't let it bother me. I went out and I just forged my own way. I got some good references and good testimonials from people that I worked with early on. And then I learned the power of marketing. And so my whole career, just as far as sales went, I went from like knowing nothing, working people that I knew or that I could kind of scrape up from nothing to online marketing, lead generation, guerrilla marketing, and then my sales just went through the roof. Within 2 years, I was already a broker, and I left my brokerage that I was working for and started my own brokerage where, I was the principal, and I was working with a lot of investors because a lot of my marketing was pitched directly to investors, and when they would come through me to get properties, they wanted good management services. And so I created another company to manage the properties because, the state of management in Rochester was pitiful. And I didn't trust these guys with my assets. So I built those two companies up. And then we realized that, contracting was the weak link now. We can't get contractors to do their job when they're supposed to do it at the quality without us micromanaging. And so we decided to bring the construction in-house as well. So now we're a full service suite. And that way we can control the client's experience from cradle to grave. And we don't have to rely on a third party that's going to drop the ball and make us look bad.
Right.
Yeah, that's great. So almost out of necessity, you like filled your own gaps, right? Like what you saw, the gaps that your clients are having or what you're having, or the challenges that you're facing, you decided. And we know a lot of people that actually do that, like, syndicators, asset managers who are butting heads with their property management company. They're like, forget it. We're just going to take this in-house and by necessity did do that. But I want to back up a little bit because I saw incredible parallels between your story and Rav's story, right? Because, he was in the creative field as well. He was in graphic design. And then, moving into real estate, he got his real estate license mainly for the same purpose as you did, is like, hey, this is a vehicle for me to invest and flip houses and do things. And then ultimately that led to a brokerage career and a whole thing. So, a lot of parallels there, between Mark, you and Rav. And probably some of the same things that, and probably around the same time. So like really challenging time to actually get into real estate at the time. And then, you made that decision when everybody was just waiting in the wings and saying, don't do it, don't do it, don't do it. I just lost my shirt. So a lot of parallels to now, right? Like, a lot of people made money in the last, 5-6 years. And then all of a sudden now everything's come to a slowdown, and you have the same stuff happening. You have people that are like, no, man, I lost my shirt. But, I've heard these horror stories. Don't do what you're doing. Save your money, stay by the wings, right? But I would argue that the people that made the difficult decisions that like you did in 2008, they're much better off for it now, right? Because they be greedy when people are fearful and be fearful when people are greedy. So, what do you take from that? Like, given the current climate and what's happening, and I mean, do you see opportunity, or do you see, hey, let's wait it out? Like, what's your thought process now?
That's a great question, right? So if you rewind the clock back to when I started, underwriting looked great. So I didn't know what people were talking about when they said don't do it. After I bought the first few and I was cash flowing like crazy, I told everybody, look, our window of opportunity is open and it's going to get slammed on our fingers. And so the whole time I was trying to pull as much stuff through the window for myself and my clients as possible. The number one question I would get when an investor would come to me, usually when they're newer investors, they've got this scarcity mindset, would be like, well, if it's such a good deal, why aren't you buying it? I said, there's so many good deals, I can't buy them all. So you can buy this, or I can make another call and somebody else can buy it, but I'm not buying it because I'm out of money. As soon as I have more money, I'll buy another one. Like, don't worry about me. I'm trying to help you. Kind of mentality. So fast forward to today, if you look at your underwriting, it's not the same, right? We're not seeing the same sort of returns that we were. So it's really hard to say, like, is this the time that we should jump in, knowing that so much money's been printed, that there's going to be massive inflation and things are going to have to sort themselves out in one way or another? My gut is telling me, yeah, like I still want to be conservative when I underwrite, but I can't wait for things to go back at the same time. Like, will they go back a little bit? Maybe 10%, 20%. Who knows? Nobody has a crystal ball, and you can't just wait for things to get better. That's over my career, I've seen more people lose money by waiting than by making an informed decision. So usually I say, hey, time is your enemy, right? Sure, things could go down, but they could also go up. So you have to understand, do I believe that real estate over the long term, whatever I'm a long holder. So when I think real estate for the long term, I'm thinking 30 plus years. And for me, ultimately, I think that real estate value is going to go up. So even if there is a dip over the next couple of years of 10, 20, 30%, whatever, as long as I'm underwriting conservatively and I'm not making stupid decisions, then those assets will be okay. And then I could, buy better assets as prices get better. And a lot of people are like, well, I want to hold my dry powder until things get better. Then you might be missing opportunities. We might not go down 10, 20, 30%. We might just continue to go up just because of how much monetary irresponsibility the government has blessed us with.
No, I agree with all these comments, Mark. And I think, as Param said, our journey's the same. I'm curious to know, so where you're at currently right now, are you full-time in the brokerage business, or are you doing half and half, sort of brokerage as well as investing or syndicating? Tell us, your snapshot at this point. What are you doing?
Yeah, so I lead the Updegraff Companies. We've got about 20 to 25 people on payroll, on staff, paid employees. And then obviously on the brokerage side, we have a lot of 1099 contractors that work with us. So my responsibility is to make sure that all of those companies are running smoothly. They're all independent, either LLCs or corporations. And my day-to-day is kind of managing those companies, managing the key personnel in those companies. On the capital raising side, I am spearheading that. So I wear a lot of hats in that role, just because I haven't brought a lot of people onto payroll that specialize in that area. So right now, my main focus is on the capital raise, specifically in client relations and marketing and that aspect. But I do delegate to my staff when there is crossover. Like obviously accounting, I can delegate to my accounting department. Marketing, I can delegate to marketing. So it's interesting when you have, three small companies, how some people will be in multiple companies. But for the most part, I try to keep things like compartmentalized if I can.
Makes sense. So you have leaders in those companies that are leading the charge, and then obviously your overall umbrella on top of that managing all these as well as you're syndicating. So on the syndicating side, then, are you raising capital for other sponsors, or you are leading the syndications? Tell us a little bit about that business.
Yep. So I'm working on a blind fund for distressed properties for foreclosures. I think that that's the best avenue for equitable deals at this particular time in my marketplace. It could be similar in everybody's marketplace. I do my research and it looks like prices really, they haven't, that bid ask spread has not closed as not as much as it needs to start striking deals. So for me, I'm looking for people that are in distress and I want to purchase like 50, 60 cents on the dollar. They typically end up being value adds. And with that model being a foreclosure, it's got to be a blind fund. So I've got investors that they see my track record. They understand that I specialize in foreclosures and they're willing to place their funds with me, knowing that I'm going to go out and do the due diligence that it takes, on title and location and, rent, value add costs and everything to get the right assets and put them into that portfolio.
Yes.
So you started your journey with these like individual residential properties, and now your business has grown. So what are you tackling? What type of assets are you tackling? Especially even in this blind fund, are you looking at a specific asset type, or are you kind of open to what's in that area?
I've always been open to anything that makes sense. That said, you've got to pick your battles. You only have so much time in the day, so I would tell you I'm focused on buying the biggest things that I can given my resources that I have available, right? So right now I would be looking for either like legacy owners that have maybe between 200 and 300 units. I don't care if they're scattered, if he's got like 20 unit buildings and 50 unit buildings, or even if he has like a variety. Some of these in Rochester, we're a kind of turn of the century town, so a lot of our housing stock was built like 1930 or before, and that means that we're comprised of predominantly single family, and then multis up to like 7-8 units are going to be more prevalent than 8 to 20 units, and then those are going to be more prevalent than like 20 to 50s, and then those are going to be more prevalent than like 50 to 200. So I'm looking for owners primarily, and they're going to have different strategies based on when they got into the market and what their comfort level was and the locations that they were buying in. So I'm looking for those guys. They're usually on their way out. They might be in like their 80s or something, and they want to unwind their portfolios. That's a good opportunity for me to step in, educate them on, the benefits of doing some seller financing. And, they typically have their rents on the low side, especially if they're in like an A-class area, because A-class rents have exploded over the last couple of years. And these legacy landlords that are, in their 80s, they're charging prices. Yeah, they're charging prices from like the 80s and the 90s. So I would say the disparity percentage-wise could easily be 50%. They're off on their rental rate. And, what in my market, a lot of them, when they come to me, they just talk about selling it as a earnings multiplier, right? So they say, hey, I want to get like 6 or 7 times my rents. And I know that if I can come in and increase the rents 40%, but I can buy it at a 6 multiple on their current rent, I've got enough spread in there where I've recaptured all my equity through that transaction. So those are like my ideal clients. I'm looking for that like quote Burr method, but on a larger scale. But I don't rule out other things. I'm looking at a 54 unit in the downtown that's a heavy value add. The seller just needs to come to terms with the actual value of his asset. And, sometimes you just have to keep working with people and be patient until they realize that like their price is wrong, your price is right. And eventually they're going to do it because there aren't many buyers that are willing to take some of these distressed assets and bring them back up to snuff.
Is your marketing, when you're reaching out to these owners, are brokers bringing you these deals, or you're actually researching, reaching out to them, and trying to basically create that relationship with them?
I'm trying to create the relationship with them. The brokers around here, they're not that great at their job. They'll email blast everybody, so if you're getting it, everybody else got it. The numbers are still the numbers are still really high through the brokers. So I'm looking for individuals that aren't working with a broker that just want an easy sale, that they know that I'm going to close, And to do that, I basically, anytime I plant a flag somewhere, so I'm doing a project downtown, for instance, we're doing an office conversion into apartments. We're doing 10 luxury apartments in an old office building. I call all the neighbors around me, and I get their information through the city's website, because you have to have a point of contact on file if you have a rental property, right? So I can go into that database, get the point of contact. If it's an old time owner, it's typically them. They're usually the ones that put their number in there. I might get a manager here and there, and then I just get the owner's information from the manager. And then I call them and I tell them what I'm doing. So it's not like a cold call. Like I actually have a warm reason to call them and say, hey, I'm improving this property. I would love to have you come over and check it out when we finish it. This is what I'm doing. This is when I expect to cut the ribbon, and kind of start building that relationship, and then get to know them on the phone, right? So anytime I'm dealing with somebody, I want them to talk to me as much as possible. So I'm a really good listener. I like to ask questions to get them talking. And then once they're talking, I can easily fill out my client CRM, my client database, with notes on that person, so I can have follow-up, right? My whole goal is to get people in different buckets of closing, right? If I can close them, whatever the sale process is, whether they're buying a house at the brokerage or they're going to invest capital in my raised capital business, right? I'm going to say, okay, I can close them in 30 days. I can close them in 30 to say 90. And then this other guy's 90 plus. And then I'll have different action items based on what bucket they're in. So after I get off that call, I get them into the CRM. I flag them with the appropriate flags. I get all those awesome notes that I put in about, their kids and their hobbies and anything else that I learned on the call. That way I can keep nurturing those leads. So I tell you, like, a lot of people get into real estate, they think it's the short game. It really isn't. It's a long game. And that's why, like, after, however long it's been, 10, 15 years of doing this, I finally feel like I have traction where the phone rings and I don't have to even go out as much as I used to and call people. I've got people that are calling me because I've done that follow-up method. You know what I'm saying?
Yeah,
religiously, whatever. I've done it consistently, and sometimes that's all it takes, right? If you're consistent with somebody for a number of years, even, they're not going to forget you, and you don't have to talk to them all the time for them to remember to reach back out to you. They say that, like, anybody can remember three dentists, or 3 automobile mechanics, or 3 capital raisers, or 3 brokers, or whatever. So I want to be one of the 3 that they remember, but not only one of the 3, I want to be their favorite. So that's why I'm building that relationship. Yeah.
And you said it. I mean, consistency is key, right? With anything, our business is really around relationships, right? Relationships with investors, relationship with partners, relationship with brokers, whatever. And so consistency is key. And so for not being consistent in cultivating and nurturing those relationships, then that kind of goes to the side. So Mark, you started your journey in a certain way, and you've kind of and you mentioned it, and we went through the same thing. Like, we didn't know what we were doing when we first bought our first apartment building. We bought like 16 units, and Rav and I were the ones like getting the calls about fixing toilets and mailboxes and this. And we were just like, all right, what do we do? Like, we're just figuring it out as we go. And like you said, like, we had that same mentality, or actually Rav had that mentality, like, let's just do it. Yeah, we'll mess up along the way, but we'll learn a lot, and we'll learn faster if we do it ourselves rather than waiting and analyzing. So, and now your business is transformed. Our business is transformed. We're doing things bigger, better, whatever, right? For someone who's starting out, right? So one of the things that one of the reasons for this podcast, for example, is that the hurdles that we faced and the challenges that we faced, the times that we fell on our face, but still fell forward, right? We fell, but we fell forward, or failed forward. How can we give it back, right? So somebody who's starting out today in today's market and wants to start investing, advice would you give them? Like, would you do it the same way? Would you tell them to do it in a certain way? If they have a day job, if they're 9 to 5 right now, they have limited time. How would they get started in investing in real estate specifically, where it feels like, as an owner, right, that they can get the returns that they want in today's market? What kind of advice would you give them? What avenues are there for them that you would say recommend to your clients?
Yeah, so obviously education is going to be paramount, right? Because if you make a bad first step, then that could really sink you and you might never recover from it. So you want to educate yourself. You want to surround yourself with local people. If you've identified what market you want to be in, a lot of people can't invest where they live because it's just not, the numbers don't work. So if it were me and I was living in an area where I really couldn't find any opportunities and I was targeting a different area, I'd want to spend a little bit of time there getting to know some of the professionals before I actually jumped in. So I would have trips there. I'd be going to the local RIAs, which is like a national organization where you'll have local chapters that meet up, and that's going to bring in your wholesalers, your brokers, your contractors, your attorneys. They're all going to meet there, and then you can meet a few key people there that'll really kind of take you under their wing and make sure that you don't get hurt. So I think having those key relationships in the market that you're going to operate is going to be huge. And know your limitations, right? At the beginning, we all think like we can do everything, right? And that I was guilty of that as well. Like I can change the toilet, I can paint the walls, I can replace a roof. I've done all these things, but as I've grown, I've realized that like I really should focus on the things that I'm good at because that's going to have the best ROI for me. If I would have known that sooner, I probably wouldn't have changed that roof or changed that toilet because I would have had the confidence that my time that I wasted doing those items could have had a higher ROI if I would have been sourcing more deals or doing more investor outreach or doing more marketing. All of those things would have had more value to my business than saying, hey, I don't want to pay a roofer 10 grand to do this roof. I'm going to do it myself.
Yeah, and and Rav and I have been looking at this in a very, very systematic way as well. Is that $10 earned, right, in one way versus $10 earned in another way. Those are not equal in value, right? Because dollar per productive hour that you spent on raising or earning that $10 really has to factor in there. So like same thing, like if I'm buying a single family home and I'm going to rent it out as an Airbnb, well, there's a lot of time that I have to spend in doing that. And so if I'm, again, earning whatever, $10 from that versus if I put something in a purely passive investment and I'm still making the $10, well, dollar per productive hour, like, or maybe I'm making $8. That $8 here is worth more than the $10 here because I don't have to spend any time on that, other than the education part, like you said, like you still got to vet the sponsor, vet the opportunity. But once it's going from an operational standpoint, I don't have to do anything. So that $8 is worth to me more than the $10 that I get from doing everything under the sun for one property.
Yeah,
so
think,
that's huge.
Yeah, and Param, I think that's really the beauty of these type of discussions is we've gone through some of this, and then our passion is education, our passion is discussion, our passion is just education and teaching people, but ultimately it's their experience, right? They have to go through that. And some people will take this to heart and say, look, these guys are telling me I'm going to do it this way. Other people will follow their own journey. And like we did, right? And we failed forward, as you said, and then, we did what we did. But ultimately, it's what got us here. So I loved, Mark, your discussion, your journey, where you're at right now. So kudos to you and good luck to you in everything that you're doing, especially in that fund, because I think that opportunity is about to hit. It may hit 6 months from today or a year from today. We don't know, but you got to be ready, right? And so those are the steps that you and your investors are taking. So when something like that happens, you guys are ready for it. And so yeah, good luck to you on that journey. I think that's really amazing. Any final thoughts in regards to comments that you want to make to our investors or even folks that are going to be listening to this podcast?
Well, I mean, if they're listening to the podcast, they're on the right track, right? Because education is number one. So the more variety of opinions you can hear and the different strategies that you can learn, that's priceless. So yeah, keep on listening to the podcast and make sure you continue your ed. Go to conferences. I think that was a huge aha moment for me. So the problem that I had when I started, I really invested in the community. I was very active on sites like Bigger Pockets, and I was like trying to give back as much as I could because I was appreciative of all the information that people that were more experienced than me were giving me to help me come up. And then when I got busy, I just put my blinders on. And it feels like 10 years, I didn't look up and see what was going on until last year. And I'm like, I should have continued my ed the whole time, right? I should have been going to conferences the whole time, and I wasn't. I was working.
Sure. Sure. And things change, right?
Yeah.
Things change, and looking at you have to autocorrect your lens at the end of the day, because things that were working 2, 3, 4 years ago are going to be very different today and moving forward for the next couple of years. And so sometimes it's the validation, sometimes it's listening to other people talk and saying, look, this is what's working for me, this is not working for me. And you can come back and you can modify and you can do a lot of those things versus learning the hard way, right? And so that's really what networking and conferences teach you. That's what they teach us. And we also love going to some of these seminars and just meeting with folks like you. Like, if we hadn't been to that conference, we would have never had that discussion with you today, right? And so I think you never know what the possibility is tomorrow. Maybe we end up doing a deal together or another, whatever, right? At the end of the day, it won't happen unless you engage with people and you talk to people.
Mm-hmm. Absolutely.
Yeah, and also the education also it helps to redefine yourself, because I know a lot of people that fall into this trap of like, well, this is how I've always done it, and this is my formula that's always worked. Well, again, like for syndications in apartment buildings and underwriting, like you said, it's a completely different thing today, and sometimes those things don't work. And so redefining yourself and constantly looking at how to do what I do better, right? I love that about some of the folks that we that we know in our masterminds. They constantly ask that question, like, how do we do things better? How do we automate this process, make the experience for the investor better, look at opportunities in a different way? What are opportunities that are coming in? What gets us excited in the next year, right? And so that's one of the reasons that, like Rav and I, we jumped into the industrial space. We were only in multifamily, and we did industrial this year because, again, lower risk profile, and that's what the market is going to sustain. And so, constantly doing that to make sure that you're finding the right opportunities, I think that's key. So Mark, how do folks get in touch with you? So if they want to reach out to you, know what you're doing up in Rochester, how do we get in touch with you, Mark?
Yeah, my cell is 585-314-9790, 585-314-9790. You just shoot me a text and I'll get you my Calendly link and we can schedule a call. I also did a ebook on marketing for capital raisers. If there's any capital raisers on this that would like to download it, it's just at raisecapital.com/ebook. It's RAZE capital.com/ebook.
Awesome. Thank you. Well, I really want to thank you, Mark, for, again, joining us and spending your valuable time with us and our listeners. Really excited for some of the stuff that you have coming with your blind fund. I'd love to have you on once you get that going, and really want to understand where that journey has taken you as well. So we'll have you back on to kind of share those stories. But again, really inspiring to see what you've created, all the companies that you've created, and really follow that passion. So, and we wish you nothing but ongoing success.
Thank you guys so much for having me on your show.
Awesome. And for our listeners, thank you for tuning in to this episode of the Spur Your Wealth podcast. Again, we are your hosts, Budham Singh and Rav Singh from Spur Equity. Remember, your journey to financial freedom begins with both knowledge and action. Where knowledge is power,
but action is superpower. So until next time, happy investing. Thank you for joining us on this episode of Spur Your Wealth podcast. We hope you enjoyed the valuable insights and inspiration. Don't forget to subscribe to our podcast and stay updated on future episodes filled with actionable tips and strategies.
If you want more information about our investment projects, visit us at spurequity.com. If you have an inspiring story to share and would like to be a guest on our podcast, email us at podcast@spurequity.com. Until next time, happy investing.